Have you ever wondered why when you see an engulfing candlestick like this one, when you try to sell like this, suddenly the spike to the upside happens and then you keep getting stopped? And another example is this one. You see that you have a perfect setup here that break the structure here, and then you see a rejection candlestick and also a bullish engulfing candlestick, and then you put your risk to reward, you enter the market with the close of the candlestick, but suddenly the market spikes you out and then move to the direction that you have anticipated. So in this video, we're going to cover everything that you need from starting to the two types of failed engulfing candlestick patterns, and also how to trade this candlestick and how it works. We are going to eventually see everything, how to enter the trade, how to actually trade it, and how to spot it in the market. And another tip is that I'm going to guide you how to profit from it, because it's fairly easy to understand. And lastly, we are going to show you an entry model so that you can at least try to benefit from it. And we're going to do some few examples at the end of the video. So stay tuned. Also subscribe if you like this kind of format of content, so that I can keep making this kind of videos. So let's begin and see how this candlestick fade in the market. We have two types. The first type is this one here, the normal one here that you always see in the market, where you see a bearish engulfing candlestick and then followed by a rejection here. Most of the people call this a CRT model, this one. Okay, I have made a video about it. You'll check the link in the description below if you want to check it out. So this one is just a normal one where you have a bearish engulfing candlestick and then followed by a rejection to the upside like this. So this one is normal. We are all used to it if you already know CRT and the basics of CRT and so forth. So in this video, we're not going to cover this one because I have already made a video about it. I think I made like 5 videos about it so far. So in this video, we're going to cover the type 1 here. This one is a little bit tricky to trade because you have to see it happening in the market, okay? But you will understand everything by the end of this video. I'll try to be as slow as possible. So every time when you see an engulfing candlestick like this one here, we are going to focus on the red candlesticks here. You will see that this one bullish candlestick pushed the market to the upside, but this bearish candlestick pushed the market to the upside. And here we have a bullish candlestick. Here we have a bearish, but this one pushed the market to the upside. Even this one pushed the market to the upside. So the only thing that you need to understand is that they are different in this situation. So if you look closely on this candlestick here, you will realize that the market made a bullish engulfing candlestick, and also this candlestick also traded below this low of this bullish engulfing candlestick here. This is where we will be looking to enter the market. You will understand, and you'll understand the lower time frame price action. By looking at this, you'll understand, but this pattern is very, very rare in the market. You won't eventually see it a lot, but you have to understand it so that even if you spot it in the market, you can eventually try to trade it. But you'll understand by the end of this video, because this is not even difficult at all. So the only thing that you need to understand is that you have to wait for an engulfing candlestick that trades at the next candlestick here. Let me do something like this. This next candlestick here, the third one, if it trades below here, if you see that the market is trading below this previous low, then you have to make an entry here, entry in the lower time frame. Okay, I hope you understand it. So that's the only thing that you need to understand. This one here is not the same as this one here, because the next candlestick doesn't trade below the engulfing candlestick's low. So if, for example, this bearish candlestick was making this move here, like this one here, trading below, we'll be looking for an entry here, entry in the lower time frame around this area here. This is where we'll be looking for an entry in the lower time frame. So right now, let's move on so that we can understand everything. Here, this is the setups here. If you see a bearish engulfing candlestick, if let's say price, you see that price is moving to the upside very aggressively and it trades above this high here, that means you should go to the lower time frame and look for an entry. That's how basically you should understand. If you understand engulfing candlestick, then this pattern is fairly simple to understand. And another thing that I want to point out is that when this candlestick is open and right here, you will see that the price action that is coming to break this high here, you'll see that the price action is going to be very strong. Like for example, we open here And then when we move to the upside, you'll see a small correction and then a sharp move to the upside very aggressively. These candlesticks will be very strong to the upside. The same applies on the bullish overview of the setup. You will see that for most of the price action that is coming to break this low on this next candlestick here, you'll see that price action is very, very impulsive. Like you'll see a strong candlestick to the downside before the market can give you a bullish candlestick close. And sometimes you might even miss it because the move to the downside is very, very aggressive in this kind of setup. So the only thing that I want to give you from this video is that you have to understand that a bullish candlestick have a different way to be traded. There are a lot of ways. Maybe sometimes I'll just try to make a series of different types of engulfing candlesticks on how to trade them. But let's move on. You'll see what I mean. So let's say right now we are moving to the downside like this. And then this candlestick will open here. This is the open. When price move to the downside, before it can break here, you will see this sharp move here. This is where you should look for an entry below this low. Then after that, you can confirm using any price action confirmation to make an entry around this area here. This will be fairly simple to understand. So if we go over and look for some few examples, and also another thing that I want to point out is that if you want to actually try to treat this kind of behavior in the market, this will be your higher time frame formation. This candlestick will be on the higher time frame, and then when you move on to the lower time frame, you have to see some kind of a strong move to the downside. You'll see those kind of moves when we move forward. Let's look at this example here. So this is the tips and guide on how to profit from this kind of behavior in the market. You have to use the higher time frame for analysis. Okay, the higher time frame will be used for analysis purposes. So in the higher time frame analysis, in the lower time frame is for an entry. And the lower time frame also will be used as a confirmation. And this is very, very important. Let's say, for example, you see this bullish engulfing candlestick happening. And then while this candlestick on the 2 hours time frame is playing out, you see that price is moving to the downside very aggressively and is breaking this low here. So that means in this situation, you will look for the lower time frame, maybe the 30 minutes, 50 minutes, or even the 1 minute to look for an entry. If we practically look for this example in the lower time frame, you will clearly see that price is very aggressive. You can see that this move here to the downside is very, very aggressive here. You can clearly see it here. Once it breaks this low, this is the low of the engulfing candlestick. That is why you see that price even broke even this low and it started to reject around this area. That is why you see another bullish candlestick confirming the trade to the upside. So if you were entering the market in the lower time frame thinking, in the higher time frame thinking that the market will push to the upside, sometimes it does not. An engulfing candlestick can be traded in so many ways. Even for example purposes, this is another ideal view of what you can see in the market. You can clearly see a bullish engulfing candlestick here, and then the next candlestick broke the low and then moved to the upside. You will see this kind of behaviors in the market a lot, but this one is very, very rare in the market. It's very, very rare. You won't find it like too many times, but when you see it, you have to try to trade it. The only one that you're going to see a lot is that engulfing candlestick followed by a rejection. I don't believe I see it right here at the moment, but you will eventually see it a lot. Okay, I see one around this area here. You can see that we have a bullish engulfing candlestick here. What I mean is around this area here. You see a bullish engulfing candlestick here, followed by a rejection like candlestick around this areas here. You can clearly see it right there. That's how at least you can try to trade this kind of behavior in the market. Even this one here on this area, you can see that we have a bullish engulfing candlestick followed by a rejection. That is why you see the market moving to the downside, even breaking the low of this candlestick here. That's how at least you can try to understand it. Even on this one, this is a bullish engulfing candlestick followed by a rejection. That is why you see the market moving to the downside. So let's look at another example here, a practical example. This is a EURUSD on the 30 minutes time frame. You can clearly see that we have a bullish candlestick followed by a rejection again, followed by an indecision candlestick like this one, and then we have a bullish engulfing candlestick. But let's look at this bullish engulfing candlestick carefully. You can see that there is a pressure pushing down and then there's a pressure pushing up, okay? You can see that we have two different moves. So eventually, if price tries to move to the downside during this, obviously you have to have some spikes in the market like this. So if price move like this and then suddenly drop to the downside and tries to push to the upside like this, that means right now we will be looking at a candlestick that is trying to manipulate the low of the previous candlestick. And also another thing that I want to point out is that if the market doesn't break the low here, doesn't trade below this low, then on the next candlestick, that means this setup has failed. But it doesn't mean it has failed. It's just that it didn't work out as planned, because this setup is very, very rare in the market. It's very, very, very rare. And I'm sure some of you who are watching this video has been stopped out by this kind of behavior before. I think I'm talking to you. So let's look at the lower time frame. You will see this is the low of the engulfing candlestick. So if price tries to come to this area and then with a strong candlesticks, that means we can be looking to go long in this kind of situation. Let's look at how the market behaved in this area. The market is trying to push to the downside. Okay, you can see that this is not a smaller move. This is a strong move to the downside. And then if you want to enter the market right there, you can clearly see that even price traded below and then came and closed inside the range of that engulfing candlestick. This is what is very important. If price trades below and then close outside, that will be a different story. Okay, it has to at least close inside. And then this will be your confirmation, because you can clearly see an inside bar. Then what you can do right now is to put your risk to what tool and make some target. But the only thing that I hate about this is that sometimes price confirms like very far from where price has manipulated the low. That is why I don't like this setup sometimes. But when it's happening, I'll use my risk to reward. That means on this setup, I'll risk very, very low. So let's look at what happened on this situation. You can clearly see that price moved to the upside. And look closely. I want to show you, I will highlight those kind of moves in the market where engulfing candlestick has failed. Look at this. Let's look at these areas here. Look at this one. Look at this one. This one. Where's another one here? Believe this one here. This one here. We have a lot. Yeah, we have like, you can clearly see that after this move, price moved to the downside. Price moved to the downside. Even this one, price moved to the downside. Moved very small to the downside. This one moved to the upside. So that's how at least you can try to understand different types. This one is the one that I told you that this is the type 2, but it doesn't matter. You can call it whatever you want. You can call it CRT whatsoever. It's just price action at the end of the day. This one here has failed. Let me highlight it. This one right there. So the only thing that you need to understand is that wait for an engulfing candlestick in the higher time frame. When you see that price is breaking below the low or the high of that engulfing candlestick, just look for a strong move. Let's look at another example. This is gold on the 4 hours time frame. You can go and check it out on your chart. It's still available. So you can clearly see that price even broke this high. It broke the high here. And then we even closed the fair value gap, followed by an engulfing candlestick. Engulfing candlestick. So from here, if price breaks this low, this is where you should be looking to go long. Okay, I hope you understand what I mean right there. And it has to happen on the next candlestick. Okay, like for an example, what I mean is that it has to happen on the next candlestick. If you look closely, we are going to compare these two here. We are going to make a comparison of this and this area here. Let's talk about it. If you look closely, let's start with this one here. This one is the one that I told you that it's more like CRT whatsoever. It's a bullish engulfing candlestick, but then the next candlestick rejects. That is why you see price moving to the downside. This is not what we want based on this video's content. We want to see this next candlestick trading below the low of the bullish engulfing candlestick so that we can go long. And most of the time you'll see that if this move happens, it has to be very, very strong. The move to the upside can be very, very volatile. So looking at this, we can see that we have a smaller body on this candlestick followed by a bullish engulfing candlestick. But then on the next candlestick, we can see that price is traded below this low. That is why you see a move to the upside. This one did not on the next candlestick. This one, yes. That's how at least you can understand what I mean in this video. So right now we're going to move on to the lower time frame and see what's going to happen if price trades below this low. Let's look at it. Here, this is the low. Price just opened and then traded below very aggressively. As I said before, that price has to be very aggressive to the downside, because let's say, I know a lot of people will butcher me on this one here. We have this candlestick here. It closed right there. This is the close. Okay, we opened right there. Then the market has to trade below and quickly return. So when it opens here around this area, price has to be very strong, breaks this low, and then give you a confirmation around this area and then push to the upside. This is a normal candlestick formation where the market just open and close like that. So that's the only thing that it can give you an idea how this candlestick will move, but I'm not sure how I will be able to explain this properly, but this is the only simplest way I can think of at the moment. But if you have any questions, please consider coming to Telegram or Discord and ask me some questions based on this video's content. And also another thing that I want to point out is that you will find the video, this PDF, inside the Telegram with the link to this video, even on Discord. The links will be in the description below. So let's see what's going to happen on this one. You can clearly see that we have a move here. We close outside, but then the next candlestick closed inside. This is where I should be looking to enter the market. I'll just place a buy here, stop loss around these areas here with added spread size. And then my trade will look something like this. I'll target maybe this high, this high, and this high. And then we can clearly see that the market moved to the upside, moved even further. Okay, that's how at least you can try to understand this pattern. But it is very rare to find this setup, guys. It is very rare. Even throughout my big testing, it was very rare to actually find this setup. It is very rare. But if you see it, try to trade it. You can go and back test it yourself and see if it suits your trading style. If not, then you may skip. I hope you understand what I mean. So let's look at another example. We have the gold on the 2 hours time frame. We have a bullish engulfing candlestick, and then we are looking for price to at least trade below and then move to the upside. Okay, then if we move on to the lower time frame, we have to see that also the price action, once price opens here, has to be very aggressive to the downside. Here this moves should be very aggressive and then give us a confirmation and push. And based on this analysis, we can clearly see that this is a perfect wave analysis here. We have 1, 2, 3, 4, and 5. And we can see here, this was just a correction here, the zigzag correction. You can clearly see that this move is very slow, but the move here is very quick to the upside. So right now we have to see the lower time frame doing something like this before we can see a move to the upside. So let's look at the lower time frame and see what's going to happen. If not, then that means the market will just continue to push lower, because not every engulfing candlestick will work in the market. Not even rejection, not even order blocks, not even fair value gaps will work every time. This is the lower time frame. You can clearly see that right now we have a strong bearish candlestick here after the market has opened. So this bearish candlestick will set the direction to the downside to break this low here. And then we should also see a move that is going to complete this pattern to manipulate this low here of the bullish engulfing candlestick in the higher time frame. So this lower time frame will act as our analysis around this area. You have to see something like this before the market can push to the upside. Then from here, let's look how the market behaves. You can clearly see that we traded below and then closed inside this range here and then made another bullish engulfing candlestick. So from here, you can wait for a retracement to enter here or enter at the close or the retracement. So then your risk to reward tool will look something like this. If you want to enter at the close, and then let's see how the market behaves. You can clearly see that we never even retraced back to this area. The market just shoot to the upside without stopping. But so let me show you another example that looks exactly like this, but in this time frame. You can clearly see that here we have a bullish engulfing candlestick right here. and then followed by a bearish candlestick. You can clearly see that price traded below this low of this bullish candlestick, and then that is why you see price moving to the upside. You will see this kind of patterns happening in the market a lot of times. So let's look at another example. Here we have AUD CAD on the 2 hours time frame. This is the analysis. If you want to make your analysis, it has to be this clean. Like on this area here, you can clearly see that we have a bullish engulfing candlestick, but right now this video is not based on this one. We have a bearish engulfing candlestick. So that means at the moment we'll be looking for price to trade above this high and then trade lower, or maybe to come around these areas to close the fair value gaps. This is here FVG, FVG here. So in the lower time frame, as I said, you have to see price moving to the upside very aggressively here before we can see a confirmation candlestick. Let's look at the lower time frame and see what's happening here. Here we can clearly see that price is trying to move to the upside, and this candlestick is very strong. Then if we look closely, we can see that price is very strong to the upside. So many people will sell around these areas, but they will be in a drawdown. Then followed by this candlestick here. This is a rejection. You can see that we closed inside the range. So this is an opportunity for you to take a sell and then put a stop loss around the above the high of this candlestick here. But sometimes you can still be stopped out even if your analysis is correct. You can clearly see we have a rejection that is a bearish candlestick, and then we have another rejection that is a bullish candlestick. In these situations, I'll enter here again and then wait for the market to push to the downside. So you have to understand also that the main point of this video is that when engulfing candlestick is happening in the market, if price trades above it like this one on the high, price, if it closes inside the range, look for an opportunity for a sell, and the move will be very aggressive. That is why you see these spikes happening in the market. You can see that it's rejecting to the downside around this area. So I guess this is the end of the video, guys. See you on the next one.